Hello and welcome to another episode of Monday Markets. As always, we're brought to you by Woo. Links available in the description below. I'd like to once again bring to your attention the execution dashboard that's available on the website at woo.org. Even if you don't trade on Woo, there's a very interesting dashboard here where you can compare a bunch of different assets, different sizes, and then look at your overall cost of trading on Woo as well as other venues. And this takes into account your slippage, fees, and basically the net cost of trading at a single venue. I would also recommend that you go on the fee methodology, where you can get a good comparison as to how to unlock more favorable trading sort of fees and tiers on different exchanges, so you can make a fair comparison between them. So even if you don't trade on Woo, if you want to compare Binance and OKX and Bybit, etc., you get some insight as to the methodology here, and you can look at different alts, as I mentioned, different sizes, and compare them across different time periods. So very cool tool. Go check it out. I think the Woo guys care a lot about execution and cost of trading, and that's very important for anyone who takes their own trading seriously. So this is worth a gander nonetheless. So let's talk about BTC and ETH, because there really isn't much else to talk about. Even ETH is a bit tangential. On the BTC front, we've had the monthly close, as discussed on Casual Friday. The monthly close was weak because it made a lower low close relative to the month of May. That to me signals a monthly breakdown of sorts, where it failed to hold this local range low. And the next levels of monthly support are at 24K, around there, 23.3, 24K. I'm fine with that being one big level, as we'll see on the weekly, and then 20K as the much deeper support. As far as resistance, the big ones are at 34, 35, and 39, but we've been trading for 5-6 months basically in the middle and between those two levels, and now it looks like testing support is more likely than testing resistance because the price action between those two levels is sort of broken down. So that's not great. The other argument that is sort of floating around in my mind is that if we get a rally during the course of this month into this kind of monthly cluster, and you can always break it down with the highest close and lowest close instead of having a big box, I expect that to be met with resistance until proven otherwise. So if you wanted to shift the monthly to sort of the bullish side, your two options are either close above the cluster high at 30K or dump into discounted levels of support. Those are the two options. For the time being, the monthly looks weak and not strong. Now, the weekly time frame is, so we're still hanging on essentially here at this local range low at 25.9, 26K. I think in one of the last Monday Markets episodes, the argument was, positive news, potential bounce, but would expect that to ultimately form a lower high before moving lower or breaking down the range, just because this support isn't that great and doesn't have a bunch of high time frame confluence around sort of 26. The deeper levels on the monthly, as we discussed, are lower down and are not here. That's essentially what we had. So this is sort of the grayscale candle where there was a pretty significant legal victory as far as the spot ETF goes, but that was retraced by the much weaker news of what should have been priced in, which was the delay regarding the BlackRock ETF and a bunch of other ones. So you have very good and sort of unexpected news having no or weak market impact, and then you have rather weak and less significant news that should have been priced in the form of the delay having a larger market impact. So that just shows you who's sort of pushing this thing around. The buyers have really good reasons to buy and they get nowhere. The sellers have less good reasons to sell and they manage to stuff the market and stuff this rally. So the stronger hand still remains with the sellers until proven otherwise. I think we expected, or rather, this sort of 26K support has done a pretty good job. I'm not sure how much more juice it's got in it. Even if it bounces, I think the bounce will continue to be shallow unless something really changes. And I think this range low has kind of done its job. As far as other weekly levels, as discussed on the monthly time frame, there's this big 23 level. To me, that's close enough to this 24.3. So 23.3, 24.3, we know the 23.3 is the monthly, 24.3 is the weekly. It's more or less the same area. If we take the weekly chart kind of on its own terms, the other side of that support is at 21K. So, once this local, or when rather, or if this local range low breaks, those are the next levels that are tradable. But to me, I really, I wasn't sure whether we were going to get a bounce from this range low. We got one, it got stuffed. And so my expectations for this level are basically gone now. To me, it's stale at this point. I'd be very reluctant to trade it unless we got something pretty material, like a spike below 2-3 weeks of lows, and then reclaiming the level. That would be acceptable. Even if it comes down and maybe even taps 24K and eventually reclaims the range, that would be cool. But the level on its own terms, without any further spikes or evidence of aggressive selling getting absorbed, my expectations for this level are not very high. So that's the weekly time frame. The daily time frame, yeah, look, bigger picture. If you look at the volatility index here, we're still in the, vol is still drifting lower. And we have these outlier days, which are usually news driven. And even after that, it sort of retraces and we keep bleeding out. And that's sort of a mirror to how price action has been ever since the sort of the second half of this 30K range, where any single green day that we had, gets fully retraced the next day, almost, very mechanically. And even on this kind of big news here, the market couldn't even follow through one single day after the news day, and within 2 days, retraced the move and then some. So low vol seems sticky, and sellers still seem in control for the time being, which sucks, but such is the market. As far as the daily time frame goes, I could start adding levels to this thing, but given my broader view that I'm not super fond of this 25.9, 26K area for the time being, I'm not sure really what the point is. If you wanted some anchors in the short to medium term, I've got 26K as the lowest close in the daily range, and then the other side of that very nearby at 26.4K. That's sort of what I'm looking at. And even, granting that, it's not a terribly optimistic view. This kind of just looks like potential bearish retest territory up until 26.4. So the daily view isn't that great either. And this structurally kind of sucks as well. Because bigger picture, we had a long range here. We broke down from that range. We had a big pump off of significant news, and that gets fully retraced, and then we're retesting that same sort of mini consolidation. It's not a particularly good or compelling technical view, and the intraday sort of carves that out as well. That daily range is essentially here, and we're sort of congesting therein for the time being. So not super fond of that. And it doesn't really scream trade me for the time being. What would be interesting, as I mentioned, sort of, instead of going through all the timeframes and assuming they're equal, I'd be really interested in, obviously, a monthly timeframe rotation to monthly support. That's interesting. A weekly failed breakdown through these weekly lows. I know perps spiked some of these, but just, spot follows through, that'd be great as well. A weekly spike and reverse would be good. As far as the daily and the 4 hour, those timeframes I don't find to be particularly useful at this point. So if you're wondering, if you've just gone through every single time frame, well, what's the stuff that you think is higher signal than noise? It's either the monthly levels or the weekly spikes. Everything else is a bit crap in comparison. So that's that. As far as ETH goes, there really isn't a lot to say. At least BTC is hanging on to its sort of June range low and is trying to find support there. ETH isn't, and it's sort of structurally bled through this area and even retested it. So that's just bad. There's really nothing that interesting on ETH for the time being. It doesn't have the same sort of very clean levels on the way down either. So I think the best argument would either to be, the best argument would be to wait for some sort of failed breakdown reclaim thing at 1700. I don't know how likely that is, and you'd need BTC strength off the back of that. But otherwise, this thing just kind of broke down and is probably going to bleed, so I'm not super fond of it. There's also what compounds this problem is that a lot of the headlines that have been bullish, even if it has been for a day or so, have all been BTC oriented, not ETH oriented. So even if you're going to be bullish, you have to then cross the additional hurdle to choose ETH over BTC. And at the moment, that seems like a very hard sell as far as making that argument. So not a great time for ETH. The S&P's been doing well. We have this love-hate relationship where when the S&P does well, we want crypto to do well, but it doesn't. When the S&P shows any weakness, it sort of spills over into crypto. I'm getting very tired of talking about this correlation because it's just been unfavorable for a long time. We had this impressive 3-4 days in the S&P, erasing a lot of this sort of diagonal dump, and crypto had nothing to show for it. So I think it might help to keep tabs on this thing, for outsized moves, maybe even outsized moves to the downside only, because we seem immune to outsized moves to the upside. But in general, I'm not spending a lot of time personally thinking about the S&P for the time being, because it's just not helpful. Now, on the altcoin front, the reason I've got nothing to say about altcoins is the following. If we look at high caps, which is primarily what we do on Monday markets, on Technical Roundup in general, we've got the changes in price amongst the high caps. On the high end, the outlier winner is Matic, up 1.63% in the last day. And then Atom is the outlier to the downside with minus 1.14%. And most of these are pretty much flat for the day. Even if you were to look at mid caps, the picture is pretty similar, where they're all sort of around 1% either way, and then some shitcoin outlier with that as well. So just not good conditions for trading altcoins. And so I'm not going to insult your intelligence by just going through the watch list and drawing 10 levels and, pretending I care about the market when it's distributed in this way. I don't think there's anything going on there. Even more recently, a lot of the on-chain stuff has dumped and rotated, and the attention has run out on the favorite crypto Twitter coins. So I guess maybe they'll cook up some new narrative there. But Uni and Unibot rather, and some of the others have played out, it seems like, in the short to medium term. So even the on-chain side of things is taking a bit of a beating. So yeah, just another dreary episode of Monday Markets. I think we were sufficiently vocal and sort of well-equipped for 30K, but now that rotation has played out, I think, that was a reasonably high conviction area, and we're now in a much less high conviction, or I guess if I weren't sort of bad at English, I'd say a much lower conviction area, having moved from a high conviction area to a low conviction area. So it kind of makes sense to wait. I don't think you're going to miss out on much if you're not super active trading 26K BTC of all things. So as long as you keep your money, I think you'll be in a good spot. That's all from me. I've been posting some educational stuff on Twitter from time to time, the open interest one, funding one, there's a bit about short-term trading, etc. If you have more ideas for stuff you want me to cover in those, or maybe add some to Monday Markets, let me know, and I'll consider your comments and requests as far as educational stuff goes. In the interim, thank you as always for sticking by this channel. Hopefully things get slightly more interesting soon. Thank you to Woo for supporting the show. Do check out that execution dashboard for a good sense and a good understanding of your trading fees and different venues and comparisons regarding that. That's all from me. Have a wonderful week, and we'll see you for newsletter, Don stream, Casual Friday. We will squeeze content water from this low volatility rock. That's all from me. Thank you, and bye-bye.